Welcome to my course, Finance Fundamentals, Options Trading, for fun and profit, basic concepts and techniques. This course is based on my book, Life Money, Quick and Easy Guide, Options for Newbies, specifically call options. Who wants free money? Does this sound like a scam? Too good to be true? Worried it's illegal? This is not a scam. It is not too good to be true, and it is definitely not illegal. I'm talking about options, specifically covered calls. Ah, you scream, aren't options risky? Don't believe the hype. Did you know options can be a lucrative method of increasing your portfolio? Options can also protect your portfolio. Inexperienced investors buy options. Buying options is the most popular strategy, especially out-of-the-money call options. Why? Because they are cheap. The guy says, buy this call option for 25 cents and presto, if the stock goes up, you'll make a fortune. And you are rolling in money. You get what you paid for. In this case, 25 cents worth. But it only cost me 25 cents. What's the big deal? You cry. The real cost, that 25 cents, applies to one options contract. Each options contract controls 100 shares of stock, so that 25 cents would cost $25 plus commission. Commissions have gotten cheaper and run about $1 to $3. So one contract, $25. Commission, $3. Total, $28 for one contract, just to open a trade with a single contract. You must then close this contract for an additional $28. Your 25 cents just turned into a $56 trade. It gets worse. I will discuss why your chosen stock option must rise in price enough to cover your cost basis, $56, and must do so before expiration, just for you to break even. Still think it's cheap? Options trading can be very profitable if done correctly. Did you know that 75 to 90% of all options expire worthless? Most people lose money when trading options. Why? Because they buy out-of-the-money, short-term call options. This is the worst strategy of all. Let's look at a real-life example with Microsoft stock. Current price $175.74 as of April 29th, 2020. This is according to Yahoo Finance. Let's take a look at what 25 cents will buy you. The expiration is May 1st, a mere 3 days away, and the closest premium that approximates our 25 cent example is 27 cents. And this is for a strike price of $192.50. That means that Microsoft must rise to above $192.50 within 3 days. Break even $192.50 plus your $56 $193.06. The stock rose by $5.93 prior to earnings and rose by an additional $3.43 in after-hours trading. But the likelihood of Microsoft rising all the way to $193.06 within the next 3 days is remote. Here are some sample topics. Why trade options? Why bother learning this? The characteristics of options, how their premiums are calculated, the time and intrinsic values that the premiums include, what moneyness is. ITM is in the money, OTM out of the money, and ATM at the money. And what do these expressions mean? The Greeks, terminology, the mechanics of online trading, buying versus selling options, puts versus calls, and the characteristics of each, break-even, earnings, volatility. But these are by no means the only concepts covered. You will learn that options come in two varieties, calls and puts, that you can buy and sell, calls and puts. You will begin to learn to recognize graph patterns, simple ones, and I will explain all the lines and what they mean. We will discuss the concepts of intrinsic and time value and what time to expiration means and how time decays rapidly in the last 30 days. Throughout the course, you will find various icons to guide you along the way as follows: practice exercises, notes, recap, quizzes, examples, and moving on to the next module. This is the type of quiz I might give you throughout the course. On Moneyness, for example. For call options, study the chart below, courtesy of Investopedia.com. In the money, ITM, the strike price is below the stock price. The words in red are the ones that I would ask you to fill in. Out of the money, OTM, strike price is above the stock price. And at the money, ATM, the strike price is the same as the stock price. You will understand in time what these expressions mean and how to manipulate them in your understanding of how options work and what is the best option for the shortest and longest amount of time. My friends, trading options is not easy and can be confusing, but the results are worth it. Disclaimer: options trading is not a get-rich-quick scheme or scam. Losses are possible, but so are significant gains. You must perform your own due diligence before committing real money to any strategy. You should practice paper trading before committing real money to a trade. Most of all, trading should be fun, as should any endeavor, especially when it comes to figuring out your family finances. If you're not having fun, it's not worth it. So join me on this course, Finance Fundamentals, Options Trading for Fun and Profit, Basic Concepts and Techniques. My name is Yaelilat Tanaka, and this is Pro Wordsmith Academy. See you then.